Hey there, fellow real estate enthusiasts. Welcome back to Real Estate Investing Simplified. I'm your trusty guide, the Real Estate Sensei, and today we're diving into a topic that affects every corner of the real estate world, interest rates. But before we get into it, do me a favor, hit that like button and subscribe if you haven't already. And if you've got questions or topics you want us to tackle, drop them in the comments below. We love hearing from our real estate ninjas. All right, let's talk interest rates, shall we? You see, my friends, interest rates are like the seasoning in your favorite dish. Too little, and it lacks flavor. Too much, and it's overwhelming. When it comes to real estate, interest rates can make or break the deal. So grab your notepads because today we're dissecting how higher interest rates impact the housing market. First off, what exactly are interest rates? Think of them as the cost of borrowing money. When interest rates are low, borrowing is cheap. When they're high, well, it can get pricey. Now, here's where the magic happens. The housing market is deeply intertwined with these rates. Imagine the housing market as a gigantic seesaw. On one side, you've got home buyers, eager to find their dream homes. On the other, you've got sellers, ready to cash in on their investments. Interest rates? They're the fulcrum, the point where it all balances. So, what happens when interest rates start to climb? Well, it's like adding weight to one side of the seesaw, the seller's side. Let's break it down step by step. Step 1. Decreased buying power. When interest rates rise, the cost of borrowing money goes up. Home buyers suddenly find themselves with less buying power. The monthly mortgage payments on a house they could afford yesterday might now feel like a stretch. Result? Fewer buyers in the market. Step 2. Increased inventory. With fewer buyers, homes stay on the market longer. Sellers have to adjust their expectations and might even reduce their prices to attract buyers. Suddenly, you've got more houses on the market than there are buyers to snatch them up. Step 3. Price stagnation or decline. It's simple economics. When supply exceeds demand, prices stop climbing and may even start to dip. In some cases, you might see a seller taking a hit on their asking price just to close the deal. Now hold on. Don't panic just yet. A dip in prices isn't necessarily bad news for everyone. If you're a savvy investor, this could be an opportunity in disguise. Step 4. Investment opportunities. When the housing market cools down due to higher interest rates, it's the perfect time for real estate investors to swoop in. You can negotiate better deals, find properties with potential, and build your real estate empire during these times. Step 5. Long-term impact. Keep in mind, the impact of higher interest rates isn't just a short-term blip. It can affect the market for years. It's like a ripple in a pond. The initial splash leads to ongoing waves. So, investors, be patient and strategic. Now, here's the real ninja wisdom. While rising interest rates can seem daunting, they're a natural part of the real estate cycle. The market has its ups and downs, and understanding these fluctuations is key to your success. So, what can you do as an investor or home buyer in a market with higher interest rates? First, stay informed. Keep an eye on the economy and interest rate trends. Second, be flexible. If you're a buyer, explore different financing options. If you're an investor, adapt your strategy to the changing market. In conclusion, higher interest rates can indeed impact the housing market, but they don't have to spell disaster. With the right knowledge and strategy, you can turn challenges into opportunities. Remember, my fellow real estate ninjas, adaptability is your greatest asset. That's a wrap for today's lesson on how interest rates impact the housing market. If you found this video helpful, give it a thumbs up and subscribe for more real estate insights. And don't forget to share your thoughts and future topic suggestions in the comments below. Until next time, keep those real estate dreams alive and kicking. This is the Real Estate Sensei, signing off.